What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about the major signs of reversals in the market. So, how not to get spooked out of trades or how to time your trades a lot better. Okay. So, the first thing that we need to know about reversals is that the major reversals on the smaller time frames happen at 10 a.m. and 11 a.m. Eastern Standard Time every single day. Okay. So, the major reversals happen at those times every single day. 10 a.m. and 11 a.m. Now, what is a reversal? A reversal is when a trend starts to go in the opposite direction. Okay, so a lot of the times people wait for a trend line break and a strong signal bar to form before getting in on trades that reverse. Signals of reversals include the following. So shooting star dojis, slingshot dojis, micro double tops, micro double bottoms, trend line breaks, double top or bottoms, down up bars, up down bars, divergence on an oscillator, smaller MA crossing a larger MA, overexhausted bars, which are huge bars that show order imbalance, and then decreased volume. Okay, decreased volume in an uptrend, increased volume in a downtrend. Okay, so let's talk about this just a little bit. So the first sign of a reversal that I wanted to talk about today was a slingshot doji. So for a lot of the people who trade, who like to get calls, who like to bet that the stock is going up, when a stock is coming down, this slingshot doji tells you when it's about to shoot back up and reverse back to the upside. So let's look at it real quick. What does it look like? So basically, you'll have a downtrend, and then what happens is you get a massive bottom side wick. So bottom side wicks are indicators that buyers are stepping in, and this is what I call a slingshot doji. And it's pretty much a doji that, to me, it looks like you're pulling back a slingshot and pushing it up. So this is also known as a hammerhead doji or hammer doji. But really it's showing you that we were moving down significantly. And once we got to, looks like a key level here, we formed a massive bottom side wick showing you buyers are pushing price back up. So that's a sign of a reversal after a down move. It's a sign of a reversal back to the upside. Okay. Another type of reversal sign is going to be micro double tops and micro double bottoms. What is a micro double bottom? So a micro double bottom is basically just when you have two bars right next to each other, adjacent each other, that form a solid bottom. This is also called a down up bar. So this bar is coming down and it closes right where the next bar opened. So whenever you see a flat bottom like that, that's a micro double bottom when they're right next to each other. This is a major sign of a reversal. Also, not only is it a micro double bottom, but we have a bullish engulfing bar. So a big bull bar that is eating up this little red bar at the bottom of a downtrend. So we're coming down, and then finally, boom, we hit this clear price point where price does not want to go below. Okay. And then the same thing for the upside. So micro double top right here. And look at this. Boom. This is also known as an up-down bar, an up-down bar. So this goes up, closes at this level, and then this one opens at this level and moves down. Micro double top. Again, we see another micro double top. Now this, from here to here, makes a double top. What is a regular double top? A double top is just an area where price does not go above, but it's where it tops out, or it's resistance. So it tops out with bars in between. So there's a couple bars in between this high and this high here. So that's why it's a regular double top. Now a micro double top would be right next to each other. Like these are right next to each other. That's a micro double top. Micro double top number one. And then these are right next to each other. Micro double top number two. Now, another sign of a reversal would be a trend line break. A trend line break. Now, what would that look like? Well, let's take a look at it. Okay. So on this side here, we have an uptrend. So we're moving up, we push down, we put in a higher low than the previous low. So a uptrend is drawn by connecting 2 points, 2 lows on the bottom of an uptrend. So we connect this point here to this point here and just draw a line straight through. Okay. So when we break that trend line, so we're holding it, pretty much holding it here, and then this time we break it, that's a sign that we're not going to continue up anymore. We're going to be reversing down. And we did. We came down pretty hard after breaking through this trend line. Okay, so trend line breaks are signs of a reversal as well. Let me allow you to see that a little bit more clear. Now, another sign of a reversal is divergence. So what is divergence? Let's talk about it. So divergence is basically when you have an oscillator. So what is an oscillator? An oscillator is a leading indicator. It's a momentum indicator. Things like the RSI and the MACD. So I personally like to use the volume RSI. And it gives me an idea of when volume is kicking in and when it's going away. So when it's coming down, volume's going away. When it's moving up, volume stepping in, we're getting price moving to the upside. Typically on the volume RSI, above 50 is good for buying. Below 50 is good for selling. Now I want to show you how I caught this play on NVIDIA the other day with divergence. Okay. And it goes like so. So what is divergence? Divergence is basically, it's when you're getting directionality in one direction on your oscillator, and then on the chart, the trend is going another way. So for instance, don't think it was this play actually. I think it was another play. I'll have to find it on another another chart. But basically, price is going. I think it was on the 2-hour time frame. Let me push out here. I'll have to find it another time. But basically, it's when, all right. So if you have the oscillator moving up in this direction here, so moving up and then price is coming down, it's a sign of a reversal. So it's when the trend on the oscillator and on the chart are different. So that would be divergence. And I'll have to make a complete other video on it because I couldn't find the example of where exactly where I found the divergence on NVIDIA. Also found it on another play. Also found it on SPY on the 5-minute time frame yesterday. But in order to keep this video pretty short, that's pretty much it right there is our signs of reversals. Again, we have shooting star dojis. So whenever we have a massive wick on the top side of an uptrend, that means sellers are stepping in. When we have a massive bottom side wick at the bottom of a downtrend, buyers are stepping in. Okay, and then we have micro double bottoms, micro double tops, and then huge over exhausted bars as well. Okay, so that's all I have for you guys today. Those are major signs of reversals. Allow you to get in and out of trades pretty efficiently and understand when the directionality is changing. Okay, so I hope you guys have a great one. It's Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,